Today, crypto prices move higher following the not too hot, not too cold jobs report. web3 projects at Snap reportedly get the axe. And what does the merge mean for Ethereum developers? Welcome to CNBC's Crypto World. I'm Pippa Stevens. Crypto prices in the green today after that August jobs report. Since noon Thursday, Bitcoin prices rose back above $20,000. Ether jumped to just over $1,600, and Polygon's Matic token rose 3.5% to hit 90 cents. That altcoin has been rising all week, in fact. Robinhood just announced it was allowing deposits and withdrawals for Matic users. NFT marketplace OpenSea also added integrations with Polygon this week. So did Meta, which now allows users to cross-post Polygon NFTs on both Facebook and Instagram. For the rest of crypto, it was all about Friday's jobs report. The U.S. economy added about 315,000 new jobs in August, and that was in line with forecasts and gave a signal to crypto and traditional financial markets that the Fed's attempt at a, quote, soft landing might still be possible. That's good news for risk assets like crypto that have been hit hard by the recent rate hikes. Okay, on to the headlines. First up, Snap is, quote, sunsetting its web3 projects, according to Bloomberg. This follows the company announcing big layoffs earlier this week, 20% of its employees. The news about the web3 project came from a tweet by a former Snap manager. Snap had been working with crypto platforms to launch new augmented reality filters that featured popular NFTs. FIFA is launching its World Cup NFT project later this month. The new platform, called FIFA Plus Connect, will allow users to collect highlights from classic World Cup games in NFT form, as well as iconic art and images from men's and women's World Cups. The 2022 World Cup kicks off this November in Qatar. Bankrupt crypto lender Celsius has filed a motion to allow withdrawals for a small number of customers. Celsius is asking a judge to allow about $50 million of the total $225 million held in special custody accounts to be released to owners. According to Cointelegraph, the motion only applies to custodied assets worth $7,575 or less. Celsius filed for bankruptcy back in July, and since then, former users have been locked out of their crypto assets. A full hearing on the most recent motion is scheduled for early October. On to our main story. The Ethereum blockchain's long-awaited switch to a proof-of-stake consensus mechanism appears on track for sometime in September. Crypto World's Jordan Smith spoke with the CEO of Tacen Labs about what the upcoming merge means for Ethereum developers.
There's been a lot of promise around Ethereum in terms of what it can do for the future. I know so far as like smart contract mortgages. There are lots of use cases that people have touted for this technology, but this upgrade that's happening right now isn't going to be what gets us there. It's more setting the scene for all of these other things that come in the future. So after the merge, what do you expect next from the platform? Is there an actual timeline for when you'll get some of these features that have been touted for so long?
I think the big impact is going to be that after the merge, there's going to be about 100 or so core developers who's been working from Ethereum Foundation and just on voluntary basis as well as full-time basis. That's going to be freed up to work on actual scaling problem, such as sharding. So I think that's going to accelerate the layer one scaling quite a bit. So what sharding will do is it will allow horizontal scaling, have different shards of Ethereum network that will allow sort of like, frequently interacting smart contract would then be executed in a similar shard, so to speak.
Could there be a case where, because the network is so much faster or so much cheaper to operate on, that developers are brought into the fold? There are people who come and start working on the network that might have otherwise avoided it while it was in its proof of work state. Is that the actual benefit for developers here?
Just a couple months ago, I was trying to deploy a smart contract or a series of contracts, and it cost me to deploy maybe 3 or 4 contracts and run some functionality on it, $750. So, it's a lot, but it's not outside of my range of ability to pay for it. But imagine if we're trying to bring in, hundreds of, developers that are out in, say, less economically developed parts of the globe, where $750 is quite a bit of money. So, which means that by bringing sort of the the cost of smart contract deployment down as well as function calls down, we're expanding the set of developers who would never have been able to participate. So thus far, the end users have been limited to purchasing things that are financial in nature, or staking or things of that nature. So it's primarily been financial speculation, which give you a lot more leeway in terms of what fees you're willing to pay. But everything in between, normal things like, okay, what about gaming on Web3? Well, thus far it hasn't been very successful because, well, if everything that you do it costs a lot of money, then it's no one's going to participate, right? So of course, then by lowering the cost and lowering the cost of development and lowering the cost to average users, um, I think that's going to bring in a lot of users and developers from both ends.
The proof of stake transition will bring down its energy use. Is that another benefit where you'll see developers come in and say, okay, now I can agree to use this platform because I'm not so worried about its carbon footprint?
Developers who are conscientious about energy use can, exactly like you said, uh, not have to worry less about its energy usage. The planned merge will reduce energy usage by 99.5%. So that's a tremendous reduction in energy usage. And not only that, the reduction in energy usage, has other benefits to just folks in general as well. In the early stage of Ethereum network, were able to run full node no problem. But then as things got more complicated and became bigger and bigger, it was uneconomical for anyone to run these things. However, now I think that hobbyists who are interested in running ETH nodes or validators, whatever, there's much lower barrier to entry.
There's a group of people who are critical of the upgrade that's coming. Do you expect that that's a significant group of people and they could potentially stay on a proof of work fork? And could that spell trouble for this new proof of stake Ethereum?
I am confident that most of the developers or users who are on Ethereum network right now are very much on board with the merge and then proof of stake migration. There are some group of miners who, understandably, they will lose tremendous amount of money by this merge, but it's not as though that hasn't been communicated for a long time. The So a lot of these people who are on the validator side or miner side, they're trying to create a fork of Ethereum network, which is, that's the beauty of decentralization. They can certainly do that. But I fear that there aren't enough number of people who are developers who are interested in supporting the fork. I'm not seeing a lot of developers taking part in, okay, if they were to stay in proof of work network, what else? What new things can they develop? Meaning, like, how would it make the proof of work Ethereum better than proof of stake Ethereum? And not only that, I'm not seeing a lot of application developers, favoring remaining in proof of work Ethereum network. In fact, if they wanted to, they can actually stay with Ethereum Classic, which is currently a proof of work Ethereum network. So there's not a good reason, but they're certainly free to do it.
The Ethereum Foundation has been testing this merge for a while now. They've done it on a few test nets. There's not a huge risk of anything going wrong, but are you at all concerned about any issues that might arise? Is there anything that people should be looking out for?
The risks are mostly to do with the proof of stake itself rather than the Ethereum migrating into proof of stake. And so things like, okay, how do we ensure that these large pool of stakers that are sort of like delegating the contributors right to a group, how do they make sure that those large stakers do not adversely use their sort of like size and position to subvert the network? Ethereum core team is working on to reduces the risk associated with the merge. We had the original chain POW and the beacon chain for a very long time, year and a half, that allowed for long-term test, and which now that they feel confident enough in merging and getting rid of the proof of work altogether. So given that that's the case, and we've also had months of testing on the Ethereum testnet, I think that the risks are fairly low. But to answer your very first question, what is the impact to developers? Very little. It's still going to be written in Solidity. But the the cost of the code deployment is going to be a lot less, and the incentive structure is now different, as well as the energy consumption.
Okay, that's all for Crypto World today. We are back again on Tuesday after the long weekend, and we will see you then.